All right, guys, here we go. No fluff, no fancy intros or anything else like that. I want to get straight to business talking about how exactly am I executing during this downtrend that's been going on here and how I'll continue to execute into the future. How do you handle catching falling knives? How do you de-risk your portfolio? It's all covered today, guys. No fluff, no nothing else. The only thing that I ask is for you to hit that like button if you like getting the truth without the hype, because that's exactly what we're going to talk about today. Now, as you guys well know, I don't believe in all in anything right there. So if you were clicking here hoping for some sort of crazy all-in Tesla type thing 2021, it's not happening, guys. However, we are going to discuss exactly what to do instead, and I actually put out this video to my group a few weeks ago, and it kind of condenses all this together into one video, so I wanted to share that with you guys here. And if you're serious about learning how to invest and be a better investor, and you want to work directly with me, make sure you take advantage of the March Madness sale that is ending very soon, where we do exactly that. We'll talk more about it at the end, but it's the pinned comment down there for those of you guys that are interested. Okay, so here's the video. Let's jump into it, and then let me know down in the comments what you guys think. All right, guys, so it looks like the market is in free fall, and we're finally getting this correction that we've been talking about now, oh my gosh, at least for 3 months, maybe even longer than that. And it's a much needed correction, more importantly. But I kind of wanted to touch on today how I'm going to execute my modified DCA if the market continues to fall, kind of some of the whys behind why I do that, and more importantly, what it kind of alleviates from my investing and why I'm able to do it so stress-free, and how it actually puts you in a better spot long-term. What is long-term? A lot of other things like that that kind of all encompass what to do during a time like this whenever it just seems like stocks are falling, all sorts of things like that. Now, you guys know, first off, I'm going to tell you, don't look. I have no freaking clue as to what my account was when everything was at all-time highs. I knew it was fool's gold. Therefore, I am not going to look right now to see how far I'm down from that point either. All it can do is induce emotions. I don't want emotions. Some of you guys may be able to handle it. Some of you guys cannot. I don't know. It's not for me to judge. I just know it's something that I do personally, if for no other reason, just to keep my sanity. But more importantly, it's just I'm looking 5 to 10 years out. I don't care what it's doing today. I just care about what can I get today? Am I following my plan, making sure I'm executing to my plan, and lots of other things of that nature. So obviously you guys saw, especially if you happen to join right around those all-time highs, wasn't buying a whole lot. And more importantly, a lot of my price targets were at prices people were like, there's no way. It's not going to go there. It's not going to fall there. May have been true, may have not been true. But that's not why I set my price targets. I set my price targets based upon that plan, based upon when I personally wanted to start up my modified DCA again on those stocks. Now, that number looks very different whenever you have all the shares you need and you have all your positions built out and you're just simply looking for bonus shares, or just simply looking to put your capital to work in the best stock possible at that particular point in time, as opposed to trying to build out a position in the stock in the first place. So obviously they would be a little bit higher, regardless of where they're at right now. But it doesn't mean I'm going to overpay because, you know, Palantir's at 80 bucks and it's going to the moon. And yeah, they were right. It went to 125, but now here we are well below 80 bucks. And we'll see where we end up landing out at that stage, because valuation always matters in the end. Everybody always says, oh, you can't value that stock this way. You got to value it that way. Oh, this stock you can't. No, they always fall back down to fair value based upon valuation in the end. There is no paradigm shift. There is, in the short term, maybe, but over the long run, it doesn't happen. Stocks always return back to those levels. And more importantly, a lot of times they overcorrect. Not all the time, but a lot of times they overcorrect. So as I'm kind of executing and as stock prices fall, which is what we're seeing right now, as they hit my price targets, I simply start DCAing again into the stock. It is simply that simple. And you can set up whatever method you want, but you know, hey, is it weekly? Is it monthly? I mean, for me, it's weekly because my cash comes in lots of different ways. So there's just always cash in my account in order for me to deploy. Obviously, if we get incredible deals, the heavier I'll do that. But generally speaking, we'll just say it's a weekly DCA into those stocks. Sometimes it'll be 2 weeks. It just kind of depends on what the stock's doing. But the point being, especially if you're building out a position, just simply DCA on your schedule. And obviously, as the stock continues to fall down, whatever metric you want to use, I don't put a specific price on it per se, or a specific, hey, if it drops another 5%, I'll add an X amount of dollars to that DCA. You can do that. There's nothing wrong with that. It's just not how I do it. Mine's much more of a feel. It's just kind of like, hey, it's going to keep falling. I'm going to keep buying. And I'm going to buy heavier, especially if it's a great stock, as it continues to fall. But what you got to get out of your head, and a lot of the thought processes you have to get out of your head, is saying things like, oh my gosh, I'm catching a falling knife and it's just cutting me all up, and all kinds of stupid crap like that. That is thinking short term, not thinking long term. You're talking like a trader, talking like a hedge fund person, like a YouTuber, or somebody who wants to be a hedge fund person, or a Wall Street person, or somebody on the news, or somebody else like that. You're not talking like a true long-term buy and hold investor. I've never heard Warren Buffett. Maybe he has, so don't blast me. but I don't recall him ever saying, oh, I'm catching falling knives and don't catch falling knives or all kinds of things like that. Those type of words just didn't, I don't ever remember him saying that. More importantly, it's wrong. You're actually not catching falling knives as a stock falls. That to me sounds like somebody who thinks they can time the market. You can't time the market. So I'm not catching falling knives. I am simply stacking shares, but the important piece is as it falls, I'm stacking shares that are less risky than the previous shares that I bought. And more importantly, they're going to be worth more over the long run. So, and this is like the perfect situation to be in. Everybody always looks back 10 years and goes, oh, I wish I would have bought more back when, the financial crisis happened or whatever the case is. But you can't time those bottoms. So the only way to have bought during those times and to have bought enough over an extended period of time, unless you happen to get lucky and dump it all in at one time, was just simply to DCA over the, basically when it started, all the way through it, all the way coming out of the back end. And then you end up with an average overall 10 years later that looks genius in comparison, but you didn't just time it once, you didn't time anything. That's the beauty of it. But more importantly, you added shares, you added shares, you added shares. So you were stacking shares. You weren't catching falling knives. You were stacking shares of a great stock. And remember, when I'm talking long-term here, I'm not talking 6 months from now. So a lot of folks get in this kind of mentality of that, let's say they buy a bunch of Palantir right now because they think it's a great price, fair value. And then Palantir, let's say, falls another 50% in 6 months, we'll say. Okay, there's two ways you can handle that. You can either be down and go, oh, I bought on, I'm down 50%, what's going on? Or you get excited like I would and go, wait a second, what's happened over the course of that 6 months? Let's see here. First thing, stock price obviously fell, right? Which means you are getting more shares, more bang for your buck, per se. So that's the first thing. The second thing is the stock is now less risky than it was at the prior price point. And what I mean by that is Palantir at 125 was incredibly risky. Palantir at $7 wasn't really all that risky, right? So, and especially when you have fundamentals to back up that this is undervalued and this is way overvalued, at that stage, the risk reward just isn't there at those higher prices. But yet that's always when people feel like they're taking on the least amount of risk, when the reality is you're taking on the least amount of risk the farther the stock falls, assuming the fundamentals are good to go. Now, if the fundamentals are falling too, that's a completely different scenario. We're not talking about that. So to me, in 6 months, if Palantir, you bought it today and it happened to fall 50%, you should be excited. That should be exactly what you want because you just are getting more shares at a better price that are even less risky than the shares that you bought. And you're taking on less risk and of course, more potential gain. You should be excited because that is opportunity to the long-term investor. Now, if you're thinking short-term, it's a disaster, but that's because you're thinking short-term, or you're thinking you can time something, or you believe that you can time something, or somebody else has convinced you that they have a better method for getting you in at better prices and stuff like that. It's all fool's gold, guys. You cannot time the bottom. You simply have to look at a fall as simply an opportunity. More importantly, let's say it's 6 months from now, you had a couple earnings calls. So if the fundamentals got better each earnings call, that means those shares are actually cheaper, not just in terms of the stock price then, but in regards to what the fundamentals were when you bought your first batch of shares, which makes them even less risky on the upside. So it's like, it's all the best things that you want in the world happening to you, but yet you're down or you're sad because you're thinking short term. You're not looking at things long term and understanding your long-term opportunity, or you're comparing your portfolio balance to what it was in December, and now it's June and it's down whatever percentage is down from what it was in December, and all those stupid head games that simply cause you to lose over the long run. You're going to lose in the short run in order to make a 50,000x in a stock over the long run, or a 50,000% return in a stock over the long run, or some of you guys that have 100,000+% return on a stock. For those of you guys that were early investors in NVIDIA, and I'm not talking about 2020, I'm talking a long time ago. We have a few guys in here that did that. So you've got to kind of keep that in mind. That is how you get those sorts of gains, is by being down in the short term, but you end up with massive gains over the long run because you can't time the bottom. If you happen to get lucky and you happen to be the guy that times the bottom, great. But not realistic, not what's going to happen. The important piece is just simply start that DCA. If you want to do it like me, get heavier as the stock falls, but more importantly, get excited as the stock falls. And if you're going, well, how do I do this? How do I continue to average down? I don't have the money. Well, you need to fix your money. That's why we have the money course in here. That's why we have the mindset course in here. So that way you have investable capital coming in every paycheck, every month, depending upon how you set up your life or whatever the case is. So that way you constantly have money to invest. It may not be as much money as you want to invest, but that's why you work on those loops. My loops have been in place now, I've been working on them for 20 plus years. And I can assure you that $100 a month here and that $20 a month there and that $50 a month there over time and doing it and every single year assessing your financial situation and attacking it and finding ways to save money, finding ways to make more money, finding ways to buy cash flowing assets that pay you, doing all those sorts of things over the course of 20 years puts you in a spot to where you can always buy the dip. And you don't have to worry about a lot of the other money problems that a lot of other folks have to worry about. You can focus on this, but it takes time. But if you don't start today, you're going to be 5 years from now and going, man, I wish I would have started back 5 years ago, as opposed to those folks that do start it today or did start it last year or the year before. Some of the folks that have been members for a while that started that, their whole financial lives flipped upside down. They have all the money in the world to invest, to buy real estate and to buy stocks. They can buy the dip and they're buying rental real estate because they took on those lessons 3 years ago, 4 years ago, implemented them, and now they're reaping those rewards today. That's the kind of time frames you got to be looking at when you start thinking that way, you start viewing money that way, and you start investing that way. It completely changes your outlook. I hope this gets worse. I hope Wall Street continues to freak out. I hope all the chaos and everything else going on right now just continues to ramp up, because I stand to lose over the long run. Do I lose in the short run? Absolutely. I have my portfolios combined are massive. It's going to cost me a lot of money in the short run, but I know I will make an absolute fortune on that back end, and it's going to be relatively easy to do because I'm not going to time anything. I'm just simply going to start DCAing, and as Wall Street gets dumber, if they get dumber, don't know if they will or won't, but if they do, I'll continue to buy the best of the best companies, take some risk whenever I want to, but generally speaking, it was easy money in 2022. You didn't even have to speculate in 2022, right? I mean, all you had to do is buy great companies and you made a lot of money all the way up through now. Now let's see if they give us some opportunities with some great companies again, based upon all this other exterior noise that over the long run isn't going to mean a whole heck of a lot. And so when you're thinking long-term like that, it's just kind of like, hey, I won't say I was bummed out the past 6 months, but it was kind of boring from the stock standpoint. And that happens from time to time, by the way. It's not unusual. This happens all the time over the course of the past 25 years. That's okay. That's why I have multiple things going on. It was like, okay, now I can focus on, my move overseas and kind of getting some things lined up for that and really running some hard numbers, getting with my tax folks. We spent weeks upon weeks. We're still dealing with a couple extra things here so that way I can execute. Of course, I wish the timing of some things may have worked out differently in regards to the stock market and kind of my plan moving forward with that. But timing doesn't always work in your favor. That's okay. I'm prepared either way for whenever that next opportunity comes up. So there's definitely a lot of positives to this, and that's how you got to view it. But you're not going to feel comfortable if you don't have a plan. You're not going to feel comfortable if you don't understand what you own. You're not going to feel comfortable if you're listening to all the noise and all the social media and all the YouTube videos and everywhere else. You're not going to feel comfortable if you're sitting there watching your account go up and down every day and you're seeing it go up 100,000, down 100,000, or up 20,000. Obviously the money's all relative, right? Nobody likes to lose money, right? You tell me to pay $8 for a coffee, it makes me angry. But obviously in terms of the stock world, $8 I would never notice. So would most of you guys out there not ever notice. So of course it's all relative. But the point being, and the bigger point being, these are opportunities, and just simply having a plan, keeping it simple, and just simply, hey, it hits your price target, just start that DCA. Just move that sucker right down. Or if you're not good at price targets yet, just start a DCA. And as it goes lower, increase your DCA slightly because you're getting better prices. You're taking risk off the table with the stock. The stock is getting less risky. And more importantly, you're able to buy more shares. And of course, if that continues to happen, like I said, you're not going to time it, so don't go all in or anything else of that nature. You're just simply buying and then let Wall Street do what it's going to do. Wait for this next earnings season and then kind of move forward. Now, of course, if you're speculating, that's a different deal. We got lessons in the stock course for that. Make sure you check those out. It's a little bit of a different strategy there. But that is simply all that I'm doing. That is simply all that I'm going to execute to. It's simple. It's controlled. There is no FOMO. There is no fear. There is no anything else of that nature. It's just simply, hey, it hits. All right, cool. I execute. And I move right along, knowing the long-term opportunity. Short-term, what's going to happen? I have no idea. Am I going to be down a lot? Sure, absolutely. It looked like everything today was just blood red straight down. I don't think there was a single stock that I own that wasn't down. Maybe there was, or maybe a couple of dividend plays were. I don't know. But I just have like a little tracker there. It just simply tells me what the stock's doing for the day, just so that way I know, do I need to buy or not? And everything was red from what I saw. So anyways, I'm not worried about it. That's how I'm going to execute to it. So hopefully that cleared up some misconceptions. Hopefully that kind of helped you out a little bit in terms of direction. And if you're ready to take that next step and work directly with me and the best 6, 7, and 8-figure Discord out there to learn how to invest, to be a better investor through 5 free courses, through free coaching, through our live Q&As, through interactions with all of our members, make sure you take advantage of the March Madness sale that is live now. It's the pinned comment down there where you get all that, plus so much more, guys. Just check out the pinned comment. It lays everything out there for you, everything that you get with a membership, and do that before the sale ends. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.